Welcome to This Week in Money. I'm Phil Mackesy. Today, David Morgan with a silver update for you. And Mike Shedlock on the good, the bad, and the ugly. Yes, it's time for March Madness in the eurozone. We begin with David Morgan right after this.
He Touched Me, the Gospel Show. Randy Elvis Frisky and his Las Vegas show band. Saturday, March 30th, 2 shows. Kelowna Community Theater. Details at randyelvisfrisky.com. Welcome to This Week in Money, the source for market opinions. Here is Phil Mackesy.
David Morgan is our go-to guy on silver. You can find him at silver-investor.com. It's the home of the Morgan Report. He's coming to us today from Spokane, Washington, the heart of Morgan country. Hey, David, it's good to have you back on This Week in Money.
Phil, it's great to be with you.
All the news this week, of course, Cyprus, people worried about bank runs and what's going on there. It is obviously affecting precious metals. What's it doing to the silver market this week?
Well, it's mixed, really. We've seen silver. First of all, we thought that there'd be a reaction to the precious metals prices. I think everybody in the sector pretty much expected that on Monday you'd see a pretty big rally. I wasn't convinced, not that the impetus wasn't there from the Cyprus event, but nonetheless, I've watched this market for so long, and I realized that don't expect the obvious. Having said that, this week has been probably a little more positive than negative. We haven't got to close yet. But what I want to go back to, Phil, is what I wrote in the Morgan Report in the March issue, and this was kind of forecasting what we saw in Cyprus. The quote of the month, I quoted Eric Sprott at the Silver Summit, and what he said was, you have to be, and this is an exact quote, you have to be cognizant of the fact that when you have money in a bank, you have a risky investment. Most people don't think of it that way, but I certainly do, end quote. Again, Eric Sprott. So I started the report with that, not knowing, of course, what would happen in Cyprus, but warning all my readers that reality isn't always what you think it is. And I went on in the report to explain in the U.S. banking system, and I'm not that studied on others, but that basically that deposit that you think is yours is basically on the ledger sheet theirs. And, of course, this is shocking for people to understand it. Now, I do not want people to sit there and run out and grab all their money out of the bank. I'm not suggesting that. What I am suggesting is that you, one, wake up and really pay attention. Two, have some money outside of the system. And I've been advocating that from well before the time I made the Matrix video. And I really want to emphasize it now because I did an alert this week for our members talking about what the Wall Street Journal had to say about the bond market. And they basically said the bond market is very dangerous and it could, or it didn't say it could collapse, said it would. And it also indicated the time frame to be near. Now, this is kind of stuff that I would say, except I wouldn't say it was, near. No one could forecast time very well. But it was alarming to me that something as substantial as the Wall Street Journal would make comments like that. So I made a video of it, sent it out to all our members just to shake them up a little bit more. I think most of the readers that read us either at our cursory level on the free list or the paid members are very awake and aware. But nonetheless, you kind of can get even complacent in that modality. Well, I've got my silver, I've got my gold, and prepared this, I've prepared that. But this is a little bit of a reshaking of the tree, you might say.
David Morgan, our guest here on This Week in Money. You were talking about Eric Sprott earlier in the show, and both he and John Embry in the markets in the news this week talking about manipulation in the silver and gold markets. This is a familiar theme, but it's one we ought to revisit every once in a while. Is there manipulation in these markets? Where's it coming from, and how can we protect ourselves from it?
Well, Phil, that could take probably a couple days, and I'll give you, a cursory answer to it. Yes, the markets are manipulated. In fact, almost all the markets are. Who is it? Basically, it's the big boys, meaning if you look at the Working Group on Financial Markets, Google that and read it, study it, understand it. It can be from the president. It can be from the Secretary of the Treasury. It can be the CFTC. It can be the SEC. It can be anybody involved at a very high level can come into any market they deem and basically do what they feel is necessary to do whatever they feel is necessary. In other words, the market's moving too high, too fast, or the market is crashing. We need to stop trading stocks on the stock exchange. We'll pull one of the fuses, as they refer to it in the slang terms. So there's a lot that goes on behind the scenes, and a lot of people just don't want this reality. It's like, well, that can't be. The markets are free. My take on it is that the free market forces are greater than their manipulations over the long term. I mean, if they can manipulate every tick, every trade all the time, then silver would still be under 5, and it's not. It's near 30. Same thing for gold. It'd be at 250 still, and it's not. It's around 1,600. Nonetheless, certainly these prices would be far higher if it wasn't for these smashings. And mostly these smashings in these markets, particularly in the metals markets, is a psychological smashing. It's people that think, oh, maybe gold's a good idea, and they get in, and then they see the price go against them for a couple of years, like it's been happening here in this long consolidation period, and they get discouraged. Or people that think, oh, geez, I'm going to get in when it gets I'm and then it gets low and it goes lower, they're discouraged, or they just wait and they never get in, and that happens a lot. There'll be people that say, well, I'm waiting for that low, and no one can pick an exact bottom every time. And they'll wait. It's going lower, then it starts to go up, and it starts to go up, and it starts to go up slowly, maybe at first. And so, well, it'll come back down, and I'll wait. And they just keep waiting. It moves away from them, and they never get in. So a disciplined approach, especially in today's environment where I just told you about the bond market, what Spot said about the banks, what's going on in Cyprus. These things aren't going away. These problems exist. They're real, and there are no solutions. The solutions basically is to hit the reset button. The problem is when you hit the reset button and reboot your computer, sometimes some of your software gets scrambled and you have a big mess on your hands. I think that's a good analogy for what we're going to see. But nonetheless, the reset button has been pressed. What we don't know is how long it's going to take to reboot the system or how it's going to reboot.
David, speaking of silver price fixing, J.P. Morgan wins their lawsuit. What's your take on this one?
Oh, boy, that's a tough one. Well, first of all, I'm discouraged by it, but I'm not surprised. It's extremely difficult to prove manipulation. That's the problem. If you can go in and say, look, this is what happened, and this is, the day, this is the time, this is the fix. The only way that you would do this is to drive the market down. It's an, unequivocal fact. But then you go in and say, you had to prove intent. You have to say, well, they wanted the market to go down and cash out. And I say, well, J.P. Morgan made all this money on that one trade, but so did this guy, and so did this guy, and so did this guy. So who's at fault here? And it's a real tough one to prove. What really discouraged me was that, if I read it correctly, and I'm pretty sure I did, is that this absolves them of a lawsuit coming back at them for manipulation. In other words, the ruling was it's thrown out, and you can't come back with a similar lawsuit about manipulation in the silver market against J.P. Morgan, which is too bad, because I think that if a different approach was taken, you stand a far better chance. But I'm not a lawyer, and of course I do have emotion involved in this arena, obviously.
Okay.
I've been more in the background than the foreground. I mean, the guys in the foreground here have pretty much been Gatta and Ted Butler, and probably in reverse order, probably Ted and then Gatta.
Okay.
But I've always held the view that if you expect the authorities to do the right thing, you're expecting too much, and I still hold that view.
David Morgan here on This Week in Money, and with Cyprus being a canary in the kind of the European coal mine here, are we going to see more trouble there? How is the continuing economic problem in Europe going to affect silver prices going forward?
I think going forward, it's totally positive. I really do. Gold, of course, will probably take center stage. And, of course, gold is still used as an asset, as a monetary asset in central banks, primarily in the eastern countries in Asia, China, India particularly, but other central banks as well. I just saw something come across the wires this morning that Texas, the state of Texas, is looking to put gold away. I haven't researched it enough to know if it's a fact or not. But there are states here in the Union that are looking to use gold and silver as exchange, Utah being one, and there's several others. So people are waking up, and the money is a trust issue. It's a confidence game. And I wrote about it years ago calling dollar.com, which was a metaphor for dollar.con, meaning it's all confidence, and once you start to lose that confidence, look out. And that's what that bond article that I put out as an alert is all about. It's that confidence could be lost quickly, and the bond market could get hit hard. So, again, I don't want to sound like an alarmist, but also I think the end of this bond article I keep referring to was tick, tick, boom. I think that's a good metaphor for how close we're getting. Tick, tick, tick. Phil, back to your question. I think you'll see more and more people. They'll say, if I can't get my money out of the bank, I'm going to start my own bank. I'm going to start the Bank of Frank. I'm going to start my own bank, and I'm going to put gold and silver in my bank. And I think you'll see more and more of that happen. I think it may pick up slowly at first, but gain momentum. And if there's another one of these type of events, and the Cyprus thing isn't over. I mean, obviously Russia came into the act strongly. And basically, there's sort of an ultimatum going on between what the EU wants to do and what the Putin contingency wants to do. Yeah. And so this thing could really unravel quickly and maybe in a direction that most people aren't thinking right now.
We're looking at some crazy times no matter what happens, and probably a perfect time to talk to you about the Morgan Report. It's probably something we should be thinking about if we need some professional advice. Tell us what the Morgan Report can do for us and how it can help us through the next couple of months, the next couple of years as we plan going forward.
Well, obviously it's been, my life's passion, and it's my intent to be of maximum service to others. Certainly I benefit as well, and that's the paradox of the free market. If you're really sincere with what you do, you can benefit yourself and others at the same time. Mostly what I write about is stuff that I invest in myself. It's basically an opportunity to look over my shoulder and see how I trade. I don't just trade, I invest. Most of my money is for long-term investment, although I do like to position trade when opportunities come available. I've got an open order in right now to go long the silver market because of what we just discussed. I think we're going to get a breakout here in silver and gold very soon, and I think it's going to continue. So you're going to get my insights. It's certainly not me. I've got 2 research analysts that work with me. I have a staff of about 8 these days. We're always looking for opportunities to help people make money. We want to balance risk and reward. We're a little different than a lot of people that are in this sector, and that is we don't really focus on these micro-cap mini companies that are going to make you a fortune. Most of them will only lose you money. We focus more on top-tier cash-rich unhedged mining companies that are nearly guaranteed to, over the long term, provide you stable capital appreciation, mid-tier companies that have a strong growth rate that can continue to give you probably better gains than the top tier. And of course, we speculate. We spend a lot of time there studying, but we don't pick very many because in our view, they're extremely difficult, and to find ones that are going to make you money is difficult at best, and that's why we call them speculations. This is money that you bet a little to win a lot on. You don't want to bet a lot to win a little. And so that's our approach overall. More is explained at the front page of themorganreport.com or silver-investor.com. Either URL will get to the same website.
All right. You can find David Morgan at silver-investor.com. As mentioned, it's the home of the Morgan Report. You can follow Dave's Twitter feed at SilverGuru22. And don't forget YouTube channel. That's a great one. I enjoy watching the videos there at SilverGuru. Hey, David, it's great to talk to you, my friend. Thanks for your time.
Phil, great interview. Thank you so much for yours.
Coming up, Mike Shedlock on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
It's always fun to talk to Mike Shedlock. Mish runs hands down one of the best economic blogs you're going to find out there at globaleconomicanalysis.blogspot.com. Or you could just keep it simple and just Google Mish. It's March, just like basketball. We have March Madness in the eurozone. Tiny Cyprus in the lead for craziest country in the eurozone. Hours away from a deal. Apparently, Mish, the finance minister, back from Moscow, says, hold everything. That tax on depositors is back on the table. Where is this story going?
Well, this story is already over, actually. It's the big story here is not what really happens in Cyprus, but actually the ramifications down the road. I don't think any country from here on out is going to trust anything anyone says. Right now, we do not see the capital flight that I expected to see from Spain and Italy. But I think in the back of all the Italians' minds, in the back of all the Spanish minds, there has to be this thought of it happened there, it can happen here too. Mm-hmm. And especially in light of what a German economist is now proposing for Italy. Isn't it great how these economists in one country come up with all of these solutions for another country? but this a German economist proposes a, quote, one-time wealth tax on Italians, 15% across the board on everything you own, and he's going to use that to bail out the state.
Wow.
Meanwhile, Italy proposes easing the stability tax and raising their national debt. So this has me wondering, Phil, is Italy the next Cyprus? And certainly Germany's going to be pulling their hair out over what Italy proposes, just as Italians. Imagine what Beppe Grillo thinks about this, if he's seen it yet, about what the Germans want to do to the Italians.
Let's get back to Cyprus for a second, and they're not calling it confiscation, they're calling it a tax, and that apparently is a way to get around the guarantee. Is that true?
Absolutely, that's the way to get around the guarantee. And it's the ECB that has this guarantee. The ECB should not be in the business of placing guarantees. It's bad enough. I believe it's fraudulent that the United States has such a guarantee, but certainly these countries, can't, print money to honor the guarantees. And the ECB has stated it's not going to bail out sovereign countries. So the guarantee itself is clearly fraudulent. I think it's fraudulent in the United States, but at least they could paper over it by printing enough money. The individual countries in the eurozone don't have that luxury. The guarantee is 100% blatantly for fraud. There is no guarantee.
Okay. What are the most...
but they pretend there is one, and they get around this guarantee saying, oh, well, excuse me, these banks didn't go bankrupt. If the banks went bankrupt, they'd have to honor the guarantee. They're saying, well, these banks are not bankrupt. They're just going to be.
Okay.
If you don't pass the tax. But if they don't pass the tax, they're bankrupt, and then technically they would have to meet that guarantee. So either way you look at it, Phil, it's a lie. It's fraud.
Mish Shedlock from globaleconomicanalysis.blogspot.com on This Week in Money. We're taking a quick trip around the eurozone, the craziness not isolated to Cyprus. Here's a place we generally think of being very quiet, very boring, very stable. Switzerland is actually not an EU member. They're having problems. The largest protest in 10 years against austerity measures, and they want a piece of the pie too. What's going on in Switzerland?
Oh my God! What's going on everywhere? Every country wants to debase its currency. Switzerland has been upset that the value of the Swiss franc is rising, so they went out there and they're selling unlimited numbers of francs to lower the value of the Swiss franc versus the euro. No one wants their currency to rise. It's even more insane in Japan, where Prime Minister Abe has a 2% inflation target, which he's not met in spite of trashing the yen by, I'm going to make up a number here, 20% or something in the last year. All he's doing is forcing people that have savings to hold on to them more because their money's buying less. They think that people are going to buy more, and by the time people actually start reacting to this, it's going to be too late actually to contain the inflation that they're going to unleash. In the meantime, it's a case of let's keep trying at what has proven not to work. Japan has national debt close to 250% of GDP. About 20 years ago, it was the world's largest creditor. And for 20 years, they've been embarking upon a campaign of defeating the deflation dragon when every citizen in Japan is actually happy with falling prices. Who doesn't like falling prices on goods, services, and food?
Nobody.
Exactly. Yeah. Well, nobody but bankers, central bankers, and banks, actually, who benefit from inflation because they have first access to money and first access to financial assets. So that's really what this is all about here. And it's economic madness in the UK. they've trashed what little of the austerity programs they had. They got this. The head of the Bank of England now came from Canada, right?
Mark Carney, our former governor.
And what does Carney want to do? He wants to go over there and do what Bernanke's doing in the United States because it appears to be working so well. Well, of course it appears to be working so well. You go out there and spend money and create malinvestments just like we did in the housing market. For a while it looks like everything's booming. For a while it certainly looked like the housing market was booming here in the United States, and that's what happens if you price money cheap enough. You create bubbles. Creating bubbles doesn't create real wealth, Phil. And there's going to be hell to pay for this. And meanwhile, Bernanke just announced a couple of days ago that he wants, to hand over the reins to Janet Yellen, presumably. Mm-hmm. The biggest dove, an even bigger dove on the Fed than Bernanke is, if one could imagine that.
Yeah.
And he's essentially getting ready to say, I'm going to wash my hands of this affair, and I'm going to turn this over to somewhere else. And I said on my blog, I said, Bernanke's going to get while the getting is good, and hopefully he can lay the blame for his mess on the next person that takes over, and that person's likely to be Janet Yellen.
Mish Shedlock is our guest here on This Week in Money, and we're talking about March Madness in the eurozone. We're down to the final four. These countries making up 75% of the economy based on their GDP. Number 5, Spain. Here's a perfect sign of the times from Spain. Tell us about this guy who invented a mattress with a built-in safe.
Well, this is kind of funny. A Spanish firm markets a mattress with a built-in safe. He got the idea while sleeping one night, trying to figure out where you could put your money that would be safe, and he kept thinking about the slogan, "Keep your savings under the mattress." And he said, well, that's not very safe. So he decided, well, let's just put a safe inside the mattress. I don't think this idea is going to fly, Phil, but it is kind of funny, and it shows you it's a sign of the times of what people are thinking about here, Phil. That's what it is. So this guy had a dream. He consulted with his pillow, and that's what he says. And here we are. And the sign here is distrust of banks and governments is widespread and growing, such that people are coming up with ideas like literally putting a safe in their mattress.
Seems like the only thing people distrust more, Mish, than banks is bureaucrats. Here's a call from the EU calling on Spain to hike taxes again, and you are calling it quite rightfully economic stupidity at its finest.
Well, that's what it is. They keep, raising taxes. What they ought to be doing is lowering taxes and getting rid of bureaucrats. That's what they ought to do. But, I don't know, Spain maybe has gotten rid of a few bureaucrats. Greece is still resisting getting rid of bureaucrats. They've not gotten rid of very many bureaucrats in Italy, and that's at least one of the things that I think Beppe Grillo wants to do correctly. I mean, he's got some pretty wild ideas of his own, but, are they any wilder than, what the central banks are proposing? Probably not.
Let's talk about Beppe Grillo for a second now. You've been writing extensively about what's going on in Italy, asking what's next. No working government for 7 months and then the possibility of elections in September. Bring us up to date on what's happening with Grillonomics in Italy.
Grillonomics in Italy. Well, first, there's a frozen parliament in Italy right now. Beppe Grillo's party, and it shocked everyone, actually, but a few bloggers like myself, And the reason why I wasn't shocked is well over a year ago, a reader from Italy, her name is Andrea, who now lives in France, has been, said, Mish, you got to start watching this Beppe Grillo guy.
Yeah.
She goes, I assure you, this guy's going to be really big. He's going viral on Twitter. People are following this guy. And, I think he's going to do far better in this election than anyone thinks. And this was, well over a year ago, before mainstream media was even talking about him. And then finally, heading into the election, they finally started talking about him, and they said, well, I don't know, this guy's going to win 10% of the vote or something, but it's no big deal. He's going to be ignored.
Mm-hmm.
And lo and behold, in the lower parliament, he actually won more votes than any other political party in Europe, in Italy. He got close to 25% of the vote. And he probably would have done the same thing in the Senate, except the Senate has an age rule. It's like 35. You got to be 35 years old to vote for the Senate, and it was all the youth that were flocking to Beppe Grillo. So he didn't do as well in the Senate, and so we have a hung parliament with no way to form a coalition. The president of Italy, which is a symbolic role, actually has no official role in the government other than to get the parties to, elect a prime minister, blah, blah, blah. But he's got a role now because of the split decision. So the president of Italy is trying to force these parties. No one wants to deal with Grillo. And so we'll see. The most likely thing, and this is what reader Andrea predicted a year in advance, was the most likely thing that would happen would be a hung parliament and new elections. And unless there's some sort of grand coalition here, it appears that we're going to be heading for new elections in August. And the only reason why there might not be or there might be a grand coalition is these parties might get together just to shut out Beppe Grillo, because his support numbers have now gone up to 30%, and there's a chance he would win this thing outright. And the politicians in Italy are very, very fearful of that. So they might get together and agree, in spite of the fact that they hate each other, just to shut out Beppe Grillo. That's the state of insanity here in Italy right now.
All this political uncertainty, of course, driving Italy's borrowing costs up. That would not be a big deal, but it is apparently one of the world's largest bond markets.
It is one of the world's largest bond markets. It is not to be trifled with. And just today, the numbers came out. Italian GDP was revised from negative 0.2% all the way down to negative 1.3% and negative 1.7% for next year. I think they're going to miss them, but I think the key thing that came out lately is the Italy finance minister, and this guy's name is Grilli, not to be confused with Beppe Grillo.
Okay.
But Grilli says that he wants to raise debt by 20 billion euros this year, 20 billion euros next year. But he says, guess what, Phil? He says, don't worry, this is the absolute ceiling, unquote.
The debt ceiling. I've heard that before.
Never to be violated again. Like, oh my gosh, once a politician says, we'll never violate this debt ceiling, well, we know where that's going, don't we?
It's already been violated. Mike Mish Shedlock from globaleconomicanalysis.blogspot.com, our guest here on This Week in Money. And the number 3 economy in the eurozone, the United Kingdom, is actually not a member of the EU. They are a member of the EU, but they don't use the euro. And a great quote here from Mervyn King. He is the temporary governor of the Bank of England, saying, "There's cause for optimism. A recovery is in sight." The next day, Moody's strips Britain of its AAA credit rating.
Well, I don't even know where to begin. How many years has there been cause for optimism in the UK? Something like the last 8? Has it ever happened? No. And now with Carney coming in, they're saying, well, there's room for flexibility on our 2% inflation target. Well, the funny thing about that is the Bank of England was one of the few governments where actually if a few countries where if their central bank was over their inflation target, the central bank had to explain to Parliament why that was so. And now they're saying, you know what, this isn't a very good idea. Apparently they don't plan on meeting their inflation targets maybe forever. So they said, well, let's just scrap that. Let's just make that advisory, not real. So essentially, they've done away with their inflation targets, and inflation in the UK is actually running over 2%, quite substantially. One of the few countries where not that you believe these reports elsewhere, but one of the few countries that is struggling here with inflation, and yet they're going out there saying, for the good of the economy, let's print more pounds, following the brilliant success, apparently, the perceived success of Ben Bernanke here in the United States.
Just goes to show you the tenuous grip on the reality these guys have. We've just got the minutes of the March meeting of the Bank of England. Their policy committee admits they are worried by the weakness of the pound. Who saw this coming?
They're worried by the weakness of the pound?
Yeah.
And they drop inflation targets? And they get this Carney guy. My God, I am hoping Canada's thankful to be gotten rid of him. And he's going over there saying he's going to emulate Bernanke.
Hard to believe.
And they're worried about inflation.
Yeah.
You can't make this stuff up, Bill.
Mike Mish Shedlock is our guest. We are doing a little March Madness in the eurozone, seeing what's going on. Cyprus, not the craziest place. Let's go to France, the number 2 economy in the EU. And the headline you were talking about last week, France postponing austerity and deficit targets for the rest of the year, just kind of waving them away.
Well, France postponed them. Italy postponed them. Truth be said, Germany is standing pretty tough right now, but we'll see how that goes. But all that's going to do, actually, is just strengthen the desire of capital flight out of the periphery, out of the Spanish banks, out of the Italian banks, whatever. Where are those citizens going to want to keep their money? Already there's a flow to Germany. And if Germany's being prudent, it's just going to exacerbate that flow. So, Phil, the only real solution to this mess is a breakup of the eurozone, and none of these politicians, except for UKIP Nigel Farage, he's the only one in the European Parliament that's just standing up there and saying, look at what you fools are doing. I don't know. Denial's everywhere, Phil, but it's at least about increasingly important things.
Let's talk about this headline in Le Monde. You were talking about Bruno Moschetto, who's a professor of economics at the University of Paris, and he's saying, I guess tongue-in-cheek, France is not bankrupt.
That wasn't tongue-in-cheek.
What?
That was, he said that France is not bankrupt, and the reason he said was it's impossible to be bankrupt if you have debts in your own currency. Well, I guess technically that's kind of true. Consider the U.S. It's got debts in U.S. dollars. It can just print more dollars and pay off the debts. Now, however, France has a foreign currency. It's called the euro. And the reason why it's a foreign currency, the definition of a foreign currency is one that you can't print. France cannot print euros. So, already his premise is wrong that France can't be bankrupt because it, doesn't have a foreign currency. Well, it does have a foreign currency that it can't print. And then he went on to say, well, France can't be bankrupt because the state is itself. Apparently, we can't go bankrupt if we owe ourselves money, which is a absolutely inane economic belief that happens to be widespread. But then he finally goes on to also say, well, just in case everything else goes wrong, I'm kind of summarizing here, he said that the citizens of France would be, quote, invited to meet its debt by an immediate increase in taxation.
Okay.
And I just to make sure I got the word invited correctly, I put this through two different translators, Google Translate and Microsoft's Bing Translate, and they both came up with the word invited. And I'm sitting there thinking, we're going to invite our citizens to pay the debts of the country. Phil, do you think that's kind of similar to the way Cypriot citizens were invited to bail out those two Cyprus banks?
That's an RSVP I don't think anybody wants to reply to. Mish, let's look at the big dog in the eurozone economy, and that is Germany. Chancellor Angela Merkel today warning Cyprus against exhausting the patience of eurozone partners, but she says she still wants Cyprus to be part of the eurozone. I'm not sure why.
That's a good question, and the reason here is Merkel has bet her career on keeping the eurozone together. She doesn't want anything to happen. That's her legacy. She would bail out Cyprus in 1 second flat if she thought that would increase the chances of the eurozone going ahead. The reason why she didn't is because she's got an election coming up in September, and German voters are furious over all of these bailouts. So this whole thing with Cyprus, she is willing to crush Cyprus into submission, destroy the lives and the banks and the economy of Cyprus if it helps her win re-election. She also wants to do in a party, AfD, Alliance for a New Germany. It's a Eurosceptic, anti-Euro policy. And, you know, if she gives 1 inch to sending more money to Cyprus, there will be strong support for this new party in Germany. So her second goal is actually to crush this party by proving she is the one who's going to stand up for fiscal prudence when her entire career, her last 7 years, she has given in time and time and time again. She gave in to Sarkozy. She gave in on Greece twice. Why did she give on Greece twice? Because she didn't want Greece dropping out of the eurozone. She's willing to risk it here on Cyprus for the simple reason that it helps her chances being reelected in September. This is what it's all come down to, is politics and legacy preserving, and we don't give a damn who we destroy, who we kill, who we hurt, as long as we get reelected and we preserve our legacy.
What a crazy system.
Phil, it's disgusting, but that's what's going on. The lies and the denials are everywhere. The new head of the eurozone finance ministers, I forgot his name here off the top of my head. He's from the Netherlands. You know, he actually, wanted to force Cypriot citizens to not a 10% tax or whatever, was suggested. He wanted it to be 40 or 50%. And nowhere, even in these revised proposals, of course they're being revised constantly here, but nowhere in any of these revised proposals has any of the bondholders ever had to take a hit. So they're protecting the bondholders here. Who are those? The bondholders are of course, and the amount is actually small, but it's people, it's bankers, the German banks, Italian banks, French banks, Greek banks. But of course, wait a second here, they're going to impose these levies on all the Cypriot citizens. but the counterparts of these Cyprus banks that are in Greece, they won't have to take a hit. So all of this is done to, I don't know, to support Merkel's re-election chances. And I see all these articles about Beppe Grillo being the most dangerous person in Europe. I actually think Angela Merkel is.
Mike Mish Shedlock, our guest on This Week in Money. Let's turn to some good news for a change. The Wine Country Conference, April 5th in Sonoma, California. Investment ideas for unconventional times. Not just about investing. This is for a great cause.
This is for a great cause, and thanks for bringing this up, Phil. I really appreciate it. I'm raising money for the Les Turner ALS Foundation on May 16th of this year, of last year, excuse me. My wife Joanne died from Lou Gehrig's disease, ALS. I started raising money on my blog, and $250,000 to $300,000. I don't have the exact total here. Came in 40 countries around the world. Some countries that people have probably never even heard of. I'll name one: Uzbekistan. Not even sure I pronounced that correctly. But 40 countries: Panama, Singapore, Switzerland, all the big companies, of course, countries, Canada, of course, Australia, Germany, France, and I got the idea to do an economic fundraiser, have a economic conference. I've accumulated some of the best and the brightest minds in the entire world. Mike Pettis, China Financial Markets, got a new book out on global rebalancing. He's literally taught me most everything I know about trade. John Hussman at Hussman Funds, he manages billions of dollars.
Brilliant guy.
Billions, with a B. And he is actually going to match $100,000 of any money that comes in. I mean, what a generous contribution from John Hussman. We've got Jim Chanos, another China expert that's going to be there. They have two of the top China experts in the entire world are going to be at this conference. Chris Martinson, who's a good friend of mine, runs the website Peak Prosperity. He's going to be there. Of course, I'm going to give a talk. Lauren Lister is going to be conducting some interviews for Yahoo Finance. John Malden is going to be there. And then each of us are going to be moderating some smaller little panels in addition to giving our own speeches. Is there a name I left out, or did I get them all?
I think you covered them all.
I think I got them all. And so it's going to be a fun time. It's April 5th. And you can do, if you're interested in the conference, you can do a search for Wine Country Conference. That will take you straight there. And I appreciate your support. And all the proceeds, no one's making any money off of this, except maybe the hotel that's where we're hosting it at. But otherwise, all net proceeds are going to the Les Turner ALS Foundation. I expect this is going to raise another $250,000. So my total, and I'm very proud of this, Phil, is going to be probably approaching $500,000 for ALS research to find a cure for Lou Gehrig's disease.
More info at winecountryconference.com. Do it for Joanne. Hey, Mish, it's good to talk to you, my friend. Thank you, sir.
It's good to talk to you. I'm glad we had this chance for an extended session here. Certainly wild and crazy things are happening in Europe and actually in China and Japan, and we will try and make sense out of all of that and with investment ideas to handle this at Wine Country Conference.
Mish, stay well, my friend.
I will, and thanks much, and hope to catch you in a couple weeks or next month.
Thanks to our guests, David Morgan and Mike Shedlock. And thank you for listening. I'm Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.